Money does not feel the same for everyone. Some people work every hour they can and still struggle to cover the basics. Others can go to sleep tonight and know they will wake up richer tomorrow, with enough to last for decades. That's because we are not all playing the same game. Wealth has stages. Most people have no idea which stage they are in. Some move forward and some fall back. Many stay stuck for years without understanding why. In this video, we will break down the 7 stages of wealth in a way that it's simple to understand and grounded in real life. By the end, you will know exactly where you stand and what needs to change if you want to move up. Let's look into the data. Where do you fall? Stage number 1, barely getting by. 11% of the Americans live here. Bills overdue, essential is a struggle. Stage number 2, just above water, 29%. They still cannot get ahead. Stage number 3, lives paycheck to paycheck, 62% spends everything they earn each month. Stage 4, low emergency savings. 45% have less than 3 months expenses saved up. Stage number 5, middle class but still struggling. 65% of the middle class household still feel stretched. Stage number 6, upper income security. 90% but still rely on active income. Stage number 7, abundance and influence. Only 1 to 2% have more than enough to live freely and making a lasting impact. Now that you have seen the overview, you probably have an idea where you might fit, but there is more to it than the numbers. What truly matters is understanding what life is like in each stage, the risks, the opportunities, and the changes that can help you move forward. We will start from the bottom and work our way to the top. Stage number 1, barely getting by. Life feels here like a constant uphill climb. Rent or mortgage payments are overdue, utility bills pile up, and sometimes you have to choose which essentials to pay first. Income is often unstable, and even the most careful budgeting doesn't seem to stretch far enough. Many people in this stage rely on credit cards, personal loans, or help from family just to get through the month. But the more debt they take on, the harder it becomes to escape. You get paid on Friday, and by Monday, most of it is already gone to catch up the bills. The fridge is nearly empty, and there is nothing left for emergency. You avoid looking at your bank balance because you already know it's low. Why people stay stuck here? Low income and high living costs leaves little room for savings. Even good money habits can work here if there's nothing left to save. Main focus to move forward, find ways to stabilize income, whether it's extra shift, part-time work, or a small side income. Even an extra $50 to $100 a month set aside can create the first bit of breathing room. Stage number 2, just above water. This is the stage where you have escaped constant crisis, but still live close to the edge. The bills are paid, there is food in the kitchen, and you might have a little left over, but one unexpected expense could set you back again. Debt often lingers here. A single car repair, a medical bill, or a missed work day could undo months of progress. For example, you want to pay for your child's $120 school trip, but you have to move money around or hope nothing else comes up that week. You might have a savings account, but it's rarely above a few $100s. Why people stay stuck here? It feels safer than stage 1, so there is less urgency to make changes, but without an emergency fund, it's a fragile position. The main focus to move forward is here, build a small emergency fund. Even 1 month's worth of expenses can make a difference, and start putting a small amount into savings or investments every month, no matter how little. Automating this can prevent spending it elsewhere. Stage number 3, paycheck to paycheck. At this stage, life feels a little bit more comfortable. Bills are on auto pay, and you can treat yourself now and then without a guilt. If something small breaks, you can fix it without going into debt. But this stability is still fragile. If your main source of income stops tomorrow, your saving might last only a few months. Many people here are also starting upgrading their lifestyle, which makes it harder to save. A relatable picture. You can take your partner out for a dinner or buy your grandchild a gift without stressing. But replacing the roof on your house would use up nearly all your reserves. Why people stay stuck here? The comfort of the stage can make it easy to stop pushing forward, especially if friends and family see you as doing fine. Main focus to move forward is increase your safety net at least 6 months of expenses and start putting more money into investments that grow on their own over time. Stage number 4, low emergency savings. Here you're better protected against life surprises. You have insurance, savings, and maybe some investments. You can replace a broken appliance or repair your car without financial panic. You might own your home, be on track for retirement, or be be helping children through college. Upgrades to your lifestyle are made by choice, not by necessity. A relatable picture. The washing machine breaks down. You replace it without needing to borrow money or cut back elsewhere. You might even take advantage of a good deal to upgrade. Why people stay stuck here? It's easy to feel secure and stop building wealth. But without strong income generating asset, you're still tied to your job. Main focus to move forward is shift your focus from just protecting your money to building income streams that do not depend on you working every day. This could be dividends from share, rental income, or a side business. Stage number 5, middle class but struggling. From the outside, you look financially comfortable. You have a steady job, a home, and perhaps take occasionally holidays. But behind the scenes, rising costs and lifestyle expenses keeping you from getting ahead. It's easy to feel like you're earning well, yet still unable to save enough for the future you want. For example, you earn $100,000 a year, but after mortgage payments, car loans, and everyday expenses, it feels like there is nothing left. A rise in property taxes or insurance premiums forces you to make cuts elsewhere. Why most people stay stuck here? Lifestyle inflation, spending more as you earn more, can erase all the financial progress you make. Main focus to move forward. Avoid letting lifestyle expenses grow with your income. Redirect pay raises, bonuses, or extra income into savings and investments before you're increasing your spending. Stage number 6, upper income security. This is a stage where you no longer worry about losing everything if you stop working for a while. You have enough savings, investments, and assets to maintain your lifestyle for years without relying on your current job. You can afford quality purchases, travel more freely, and live wherever you choose without financial stress hanging over you. For example, you take on projects because you enjoy them, not because you need an income. You can visit family across the country without worrying about the travel costs. Why people stay stuck here is it feels safe, but they may not take the steps needed to create lasting independence. Main focus to move forward is use your position of security to create full independency, where your investments and assets produce enough income to cover all your living costs. Stage number 7, abundance and influence. This is the top 1-2% of the population. Money is no longer about survival or comfort, it's about choice and the ability to make an impact. At this stage, you may own multiple properties, business, or significant investments. You can live anywhere and travel anywhere and give generously to causes that matter to you. For example, you're not just donating to a charity, you're setting up the fund that will support it for generations. You can help member families buy homes and start businesses or go to university without worrying about your own finances. Even if you're in stage 1 today, the habits that build wealth are available to anyone. You do not have to inherit money or win the lottery. It comes from making consistent, thoughtful decisions over many years. 3 practical steps to move to the next stage from any starting point. Number 1, know your numbers. Track your income, spending, savings, and debt. Awareness is the first step toward control. Number 2, automate saving and investing. Even small amounts grow over time. Treat your savings like no other bill you must pay. Treat your savings like any other bill you must pay. And 3, reduce high interest debt. Every dollar spent on interest is a dollar that could be growing for your future. The stage you're in today doesn't have to be permanent. Small, steady improvements can completely change your position in a few years. If you do like to know how many Americans have saved $1 million and which category you fall into, watch this video.